Hey there everyone, welcome back to the Indus YouTube channel and welcome you all to the new playlist that is order flow analysis. And in this particular playlist, we're going to discuss about order flow from the scratch. And by the way, this is the first video of this playlist where we're going to discuss about introduction of order flow, and also we're going to discuss about main key difference between the Japanese candlestick and order flow. Along with that, we also going to cover benefits of order flow and some theory which is required to understand the order flow. And at the end of the video, we're going to also discuss about is it worth to learn order flow analysis or not. So without wasting much time, let's get started. Yes, guys, welcome back. If you see, I have opened two different charts. One is Japanese candlestick, which is very familiar to you, and the second one is order flow. And if we talk about Japanese candlestick, left one, which is very familiar to you, and even I hope a lot of you do your analysis, and a lot of you use candlestick pattern to take the entries as well, right? So let's discuss the key difference between these two. So first, let's start with the Japanese candlestick. If you see Japanese candlestick, what is the information we can get by watching this particular chart type? Especially if you see candles OHLC, open, high, low, close, we can get this information from the Japanese candlestick. So in this, you get OHLC, and a part of that you also get the color coding, like green represents buyers are in control, and red represents sellers are in control. So you know all this information. So now let's see what is order flow. If you see, order flow is also similar to the candlestick, right? You can see same sort of candles here as well. But what is the main difference you can see here is you have some data plotted besides either side of these candles. Okay, you can see, especially if I talk about this particular candle, it is 17/5/2024, 2 p.m. candles, 5 minutes time frame, that particular candle it is. And if you see here, we can see a Japanese candlestick pattern, and we can say buyers are in control, and it is somewhat near to Morobujo candle, so we can say that buyers are strong here, right? So but you cannot say that. If you see, the particular candle is somewhere almost near to 58 points. Okay, so in this 58 points, you cannot say at what price the buyers are aggressive, or at what price sellers are aggressive. We cannot identify that using Japanese candlestick. But the same thing you can identify by using order flow. If you see order flow, the bold green color indicates the aggressive buying. Okay, so how to see that, and how can you say this aggressive, and all this stuff we're gonna to discuss in the upcoming videos. So don't worry about that as of now, but you can simply see, you can one, two, three, almost four aggressive attempts. In that, if you see the top one, almost near to 398 lots of buying happened here. So we're going to discuss that, no need to worry. But what I mean to convey here is, you can see, we are seeing only candle here, but here you are seeing the volume executed against the contracts. Okay, so that is the key difference. And if you just go to Google and search what is the difference between candlestick and order flow, you get lot of differences, but the very key difference is this, according to me. If I keep this in simple statement, then order flow has additional information compared to the Japanese candlestick. So can I say like this? Yes, right? Yes, we can say that we have additional information compared to the Japanese candlestick here. So yes, guys, I also pasted a screenshot of order flow chart here, and I want you to frankly answer this. How many of you got confused initially when you see the order flow? And if you are also one of the person who got confused by seeing the order flow, it is quite normal. What happens is, order flow gives you overwhelmed information, so which makes you confused. But yes, no need to worry, because we're going to cover each and every topic in the upcoming videos. And by the time you finish this playlist, you will be able to read order flow without getting any confuse or any headache. Okay, so hope till now you understood. So yes, guys, let's discuss about benefits of trading order flow. So let's see one after each. Order flow shows psychology, what is happening in the struggle between buyers and sellers. See, usually, why the price moves, or like why the price fluctuates. The reason is because of supply and demand, right? In other words, you can say it is the fight between buyers and sellers. So you can clearly see what's happening in between buyers and sellers, who are winning and who are aggressive. All these sort of things you can get by watching the order flow. Let me also show you the example. So let's take any example. Let's say let's take another some other candle. For example, this particular candle. Okay. So in this particular candle, we can say by even watching the Japanese candlestick, you can say here buyers are strong, right? You can say because we got a rejection at the bottom. Okay. So if you see in this particular candle, we have two aggressive buyers, right? At two prices, we got a aggressive buyers, but also we have this POC at the bottom or in the wick of that candle. All these things we're going to discuss in the further videos, but my intention to show you is you can identify this sort of wick candles, or you can also identify this candle as strong. Okay, which candle? Let me show you again this particular candle. So this particular candle. Okay, but what if I say you try to analyze this candle? It is little bit of tougher, right? Because in the Japanese candlestick we don't get this sort of data, but you can see here clearly buyers are aggressive at these prices, right? So you can clearly see the struggle between the buyers and sellers in the order flow, and also you can see who is aggressive or who is stronger. Okay, so this is the first point. So now the second point is helps to eliminate randomness from the trade decisions. Now the second point is also interlinked with the third point. Let's read it together. Helps you to stay out of choppy markets, or it also helps you to identify choppy market. So now see, choppy market is one of the enemy. Like on that particular days, if you are fighting with the market, and if you are going with excess quantity or bigger position sizing, then obviously that days will we will see majority of losses and over trading happens, right? If you can able to identify the choppy markets, then you can stay out of the choppy markets, right? Which will eliminates randomness from the trade decisions. You will not take excess trades, and it also helps you to eliminate randomness from the trade decisions, because you take random trades when you are lack of direction or like lack of information. You get into that stage, you take excess trades, but by the help of order flow you can control that. Now coming to the fourth point, which is very important: no lag. Like retailers, most of our retailers journey will be starts from the beginner's luck, and thereafter we try to learn some price action, and also we believe in indicators. We do indicator trading. This is the phase where many of the retailers will come on. But as I said, we come across a lot of indicators. A majority of them are lagging indicators, and some of them are leading indicators. But coming to, if I talk about order flow, it's not an indicator, but still it will show you the information which is happening now. Okay, so there is no lag in this. If the fight is going on and the present CMP, current market price candle, then you can see who is strong there, who is weak, and what's going on in that candle. You can watch and decode that at the present time. There is no lag in that. So hopes this is also biggest benefits of using order flow. Now coming to next point, it shows how aggressive buyer and sellers are. I already shown you on the chat as well. You can see how aggressive buyers and sellers are. Now coming to next point is order flow shows you when there is change in supply and demand. So not only change in supply and demand, but you can also identify the supply and demand zones using the order flow as well. Now coming to next point is quantify risk. See, you can also find the good trade locations, which helps you to keep small risk and you can target for the bigger reward. So hope you understood the benefits of order flow, right? Now let's see about participants. See, this particular topic we already discussed in our market profile series, right? Let me show you the video as well. So yes, guys, if you just open my YouTube channel, in the playlist tab, you will have a basics of market profile playlist, and just if you click on view full playlist, then you can see the 3 videos which are uploaded as of now. So in this particular video, why to learn market profile, we have discussed this particular topic. But still, I am explaining you in a short and quick recap. But if you want to learn in detail, then I highly recommend you to go and watch this particular video. So, what type of participants we discussed in the market profile series? We have two type of participant, that is smart money, big players or other time frame traders we call them, and the second one is flow traders or a liquidity provider or retailer are the second type. So obviously we have two types. In daily usage language, you can say smart money and retailers. Okay, two participants. So in the smart money also we have long term buyers and long term sellers, which we call at one time frame buyers and one time frame sellers, which we have already discussed. Now coming to, in this particular video, we're going to make different sort of differentiation in the participants. In the participants, we have two different types. One is passive and one is active. So why we need to understand or why we need to learn this particular participants? Because if you watch, this particular order flow, here we have different numbers, right? You need to understand ask and bid. Okay, we have bid and ask prices here. In order to understand who are on bid side and who are on ask side, you need to understand this particular passive traders and active traders, or in other words, passive participants and aggressive or active participants we need to understand. So let's go. So now let's start with the passive market participants. Passive market participants are traders who enter their trade with a limit pending order. See, passive traders will wait for their price to come. Okay, they don't chase the market. They know at what areas they are willing to enter. They know at what areas they are willing to exit. So mostly they will handle the things in the limit orders, not with the market orders. So you can say like this: passive market participants are traders who enter their trades with a limit orders. They do not chase the market, they will wait for the price to come to them, and they enter their trades only for the price they wanted. Okay, so this is one key point of passive traders. Then you will get it out like, is only the big players are considered as a passive participants? No, if you are also entering with a limit order, then even you can be also called as passive market participants. So here the important point is like, or one whoever waiting for some particular price, then that guys can be called as a passive market participant. When the price hits the limit order you placed in the market, the order gets filled and you get into the trade. So this is the passive market participant. So now let's see how we can see this passive market participants in the order flow. So yes guys, now let's see how this passive market participant positions will be shown on the order flow footprint chart. So let's see. Don't get confused, order flow or footprints are the same meaning but different names. Okay, so order flow is also called as footprint and footprints is also called as order flow. So now if you open a long position with a limit order, then it will appear on the bid side of the footprint on the left. If you see, this is the bid side and this is the ask side, you can clearly see below. bid is on the left side and ask is on the right side. And if you are placing a long position with a limit order, then that will appear on the bid side. If you are a passive seller, if you are placing a limit order and if that is executed, then that will be shown on the bid side. Now coming to, if you opened a short position with a limit order, then that will appear on the right side, that is on the ask side. Okay, did you understand till now? Because it's very important, you need to understand till now, because next part is a little bit of confusing, because if you understand this part, then only you can understand that. So it's very important you to understand this. If not, just revise the video and play from starting of this slide. Okay, so hope you understood. Very simple. This is bid side, this is ask side. And if you are opening long positions in a passive manner, passive market participant, then the long positions will be on the bid side, and if you are opening a short position, then that will be on the ask side. Okay, now let's see the active market participants. So who are active market participants? If someone is entering with the limit order, then they are called as passive participants. If someone is entering with the market order, then they will call as active market participants, and also they can also called as aggressive market participants. So now let's see. Active market participants are traders who enter their trade with market orders. If you press a market buy or sell, then you are an active market participant. So again, you might say me, boss, who is active market participants? So if you are executing trades with the market order, then even you are a active market participant. So one very simple difference, if you take passive and active, passive will open their positions with the limit order, and active will place their positions with the market order. So no matter where the price currently is, no matter where exactly the trade is going to be filled, aggressive participant just want to in. So, because sometimes you see you get the slippage issue, right? When let's say some stock or strike is trading at 200, if you are placing a market order, it simply exchange with the seller. So sometimes you get the slippage of 10 rupees, like the order will be executed at 210 or sometime 205. Definitely you majority of the times you see you get to see that slippage. So now these particular active market participants will not worry about the where the current price is, and they will also not worry about how much slippage I will get. So usually many of retailers also act comes to this particular category, but coming to smart money also use this particular approach when they have very limited time, or when they want to accumulate more quantity and the time is less, and they are expecting the move very fast, then they will also participate active market participation. So a market order is useful in situations where there is no time to wait to get your whole positions filled exactly at the price you wanted. For example, this could be when there is a quick price movement that you don't want to miss. So hope you understood the active market participants as well. Now let's see, here comes the actual confusion is, because previously if you see, we have seen passive buyers on the bid side and passive sellers on the ask side. But if you see in the aggressive, we see aggressive sellers on the bid side and aggressive buyers on the ask side. Okay, so this is the little difference you need to understand, and it's very important. So hope guys you understood, but still if you are facing issue in order to differentiate between the passive and active, then let me combine this, okay, so that you can easily understand this. Very simple. Passive market participant, if you see this particular candle, the passive sellers will be on ask side and passive buyers will be on bid side. When coming to active market participant, seller will be on bid side and buyers will be on the ask side. Like if you combine this, you can see like this combined market participants. If this is the candle on the ask side, it can be a passive seller or it can be also a aggressive buyers. On the bid side, it can be a passive buyer or it can be a aggressive sellers. So it's not like you say, if you see this 85, you cannot say that it is a aggressive buyer. Okay, it can be also a passive seller. So the first question hits your brain after seeing this is, how can we identify difference between is this number is from passive sellers or aggressive buyers? So here comes the problem. You cannot exactly say that this number is from the passive seller or from aggressive buyers. So you might ask me, then why are you wasting our time all these minutes? So don't worry, my friend. By the end of this playlist, you can identify that in majority of cases, you can identify whether they are passive buyers or sellers or active buyers or sellers. Which I mean to say is, on this side, you can identify whether they are passive sellers or aggressive buyers. And on the bid side also, you can identify whether they are passive buyers or aggressive sellers. This can be possible. But the main important point, if you see in some videos or in some content in the internet, it will say like this: everything on the ask side will be the buyers, and everything on the bid side will be the sellers. This sort of stuff we see on some platforms. If they are showing like this, then trust me, they are not 100% right. Okay, so because I have shown you the representation, if we are seeing some value on the bid, then that can be a aggressive sellers or it can be also a passive buyers. But yes, coming videos will help you to understand much better, because we use lot of other components of order flow in order to understand whether they are aggressive buyers or passive sellers, and we can also differentiate on the bid side whether they are passive buyers or aggressive sellers. So hope till now you understood. I felt okay. I understand the last part. You felt like much of theory, but that theory is very essential to learn, because without this particular understanding, it's like no use of learning the other concepts. Okay, because you can't understand. This is the very key concept you need to understand in order to learn the order flow. So at any part of the video, if you like my efforts in making this video, then please click on the thumbs up and make sure you subscribe to the YouTube channel, and don't forget to join the Telegram channel, because it's like quick medium between you and me. So if you see, we have 394 subscribers here. So link is in the description. From there you can join here. And if you see, we share all the live market updates and order flow updates. Also, we share here market profile and some labels. And I also share my day forecasting in the Telegram channel. So don't miss. And I highly recommend you to join the Telegram channel, because that is the immediate and quickest medium between you and me. So see you in the next video. Until then, this is Krishna signing off. Jai Hind.